Welcome to BitBoy Crypto, home of the BitSquad, the largest and greatest crypto community in all of the interwebs. My name is DZ. We come to you Monday through Friday at 5:02 p.m. Eastern Standard Time, and today it is my fault. We are late. I was talking with the community here about rugs and all the implications there. But today we're talking about Bitcoin being brutalized, EDX exchanges, and doodles. Your favorite topics, that is crypto, with your favorite guests. We're going to get right into it. On the top right, rocking the 10-gallon hat, it is Cowboys of Crypto. And you know what? He's saying yeehaw to the bull market. Then on the bottom right, we have Mac and Cheesy, always spooning up good morsels of goodness and alpha there. Then on the bottom left, we have Joe Parys. Yet again, maybe a new location. Every day he's in a new spot. Joe, you're not on the lam, are you?
No, I'm not.
Okay,
I'm actually in the same location from the last two times, but
it was the dark background. That's right. Yeah, you're in the darkness last time. All right, then
bought a light.
He bought a light. Bitcoin went above 20. He was able to afford a light bulb. Then on the top left, of course, we have Brad Varnell holding it down at Crypto Brad V. You can check out their content and make sure you're following everybody that is around the blockchain today. Got some good topics, but before we break into those, I think it's time for us to check out this crypto market, see where things are headed. It has been, wow, okay. I was not expecting to see such a drastic number. Well, you look at that. Bitcoin down 9.5%, nearly 10% there. We have Ethereum holding up slightly better, down only 6.7%. BNB, Binance, XRP, Cardano, everything looking quite down. If we go, normally you don't look at the top gainers or losers. Oh, geez. Oh, God, move on from that one. And the graph, strong coin there. I might look at some levels. I'm a fan of the graph. All right, Thor, Ravencoin, Avalanche, all down about 10% or more. So, Joe, I'm going to bring it to you first. The markets are down, and they're down heavy. A lot of people, obviously, this is coming from the core CPI data, the regular CPI data. Now it's down. The dust has settled. What do you expect over the next week or two, though, before the Fed minutes are released? We know it's probably going to be 75 or 100, but in the meantime, what can we expect with Bitcoin? I mean, can it hold 20K?
I mean, thanks again, DZ, and the entire BitSquad for having me back on the show. Smash up the like button, Bitcoin and
likes,
the entire market. Yeah, we need it today. But this is par for the course. Honestly, we have a huge Ethereum merge coming potentially in the next 24 to 48 hours. So I think that there's a lot of buy the rumor, sell the news happening. But I think the reaction we saw today was definitely from the CPI numbers, and basically it was just slightly over at like 8.3. They were expecting 8.1. I actually think this is more bullish for crypto than ever before, though, because Bitcoin and cryptocurrencies are really, I guess a lot of the narrative has been, to help against inflation. Bitcoin is that store of gold that, basically only has a $21 million or 21 million coins and $21 million. We wish it was back there, but 21 million coins. That's it. And it's a quote unquote safer haven for that. So will it hold 20,000 is anyone's guess. I mean, I'm a little bit nervous, certainly, because, the market reacted the way that it did. It will be interesting to see next week what happens with, the Fed and what they do. So I would definitely be paying attention because we're seeing some volatileness. Again, I mentioned this on the last stream. Traditionally, September is a very red month for crypto. So this is, like I said, a little bit par for the course. Fingers crossed here. But I'm still in the camp of that the bottom is actually in, and that we might actually just be trading sideways here until we kind of like work through September and start getting some better news. So there's not all like lost yet. There's still a glimmer of hope for everybody, not financial advice.
All right, Cowboy, you're shaking your head. I'm guessing you don't assume the bottom is in. And what is that what you're shaking your head about?
That's right. Yeah.
All right. What levels are you looking at? Is it that 9, 10, 11, 13, 14 range, or are you super bear saying maybe even 3K here?
Yeah, what levels? That's a crazy question. The levels is as far down below the earth as possible. Look, Bitcoin
negative money.
And the crypto markets are, what was that?
Negative money. You'll pay me to take your Bitcoin. Sign me up.
Negative money. Look, the crypto is more testy than a hungry wife, okay? So we should be anticipating all this type of FUD, all this type of news, just messing around with Bitcoin. If Bitcoin and the crypto markets could be adjusted by some kind of tweet, we should be expecting all this type of FUD hitting. And there's really two reasons why you would buy into crypto or Bitcoin at all. One is tangible. You think that it's going to be worth more now than in the future. Or two, philosophical, that you are here in it for the long run and you opt out of the future agendas that governments and central bankings have, that you don't agree with that, and that's why you buy into it philosophically. You buy into crypto either one of these two ways. You either think that it's going to make a lot more money, or philosophically you just opt out of centralized everything, centralized everything. And that's where I'm at. And I fluctuate between both. And so when you buy into it tangibly, when you think that it's going to go up, you start seeing as 9% as a big move, a big shift, like, oh, we're going to get destroyed with 9%. 9% is the equivalent of me cutting my fingernails too shallow. Okay. That is how it affects Bitcoin. It doesn't affect Bitcoin. It shouldn't affect Bitcoin because, and especially Bitcoin, because of the crypto markets, right? Because we're in it for the long haul. All of us here. We're going to be wealthy.
Okay.
If we're in it for the long haul, we're going to be wealthy. If we're trading, we're asking for a lot of trouble.
All right, I do want to push back. Sometimes you cut your fingernails too short, and it stings a little, right? Sometimes
stings a little bit.
All right, Brad, I'm gonna bring this one to you because we're closest in age here, and so you've seen some bad inflation actions by the government. You've seen bad inflation, just generally speaking. We're at 40-year highs. I'm guessing you're probably a wee toddler around that age, maybe a little older, but I want to ask you the question. Joe brought this up, this inflation number. I'm long-term bullish why it's a good hedge against inflation. I agree. I brought this up before. When will a bad inflation number or inflation being really high equal a Bitcoin pump? Because right now we get bad inflation data, entire markets dump across the sector. When will that change? Is it next bull run, two bull runs? Is it 50% global adoption? I mean, is this never happening? When will inflation bad equal Bitcoin good?
I think we're a long ways off from that, unfortunately. I just don't think that the average public understands the numbers like we do. They don't understand that Bitcoin is the digital gold, that it is the hedge against inflation. Yet, right now, as I've talked a lot about on my channel, the reason that the markets are acting so bad is because in trying times like this, in uncertain times, the money goes into more safe assets. The more speculative assets get crushed, and gold is considered to be one of the safest assets there is. And unfortunately, people don't realize that Bitcoin is even better than gold, that it's safer than gold. Yeah, it's got some more volatility, but long term, you're going to make a lot more money and you're going to preserve your wealth 100 times better, in my opinion, by holding Bitcoin than you by holding gold and assets like gold and silver, those assets that 10, 15, 20 years ago were the hedge against inflation. I just don't see those having any value compared to Bitcoin in the current current market conditions. But once again, this it's all about education. That's why we're here. That's why we do these shows, is because the average public needs to get caught up and figure this out for themselves.
All right, just to kind of hold you down, what kind of ballpark would you give for the inflation narrative to take root, though? Is this a 10-year away, 20-year away, 50-year away?
Well, I'm curious to see how the Fed and what the government tries to do. I've mentioned this before. I think it's like trying to put a Band-Aid or some duct tape over the Hoover Dam when it's split in half, trying to fix these problems that are basically unfixable at this point. It's just a matter of how long can they hold them off for. And that's why I tell our viewers, get in the game now. You might have a year or two or five before the really hits the fan. But man, right now the middle class is getting wiped out, and it's just going to keep getting worse. And I would say, I would really, if you pin me down on a time frame, I would say that the next 5 to 10 years is probably where we're going to need to be at before we really start seeing the public understanding the power of blockchain technology, understanding where Bitcoin is going to be the best place to park their money, and understanding a little bit more of the the micro and macro economics of our situation.
All right. Well, Mac, I'm going to try to, bridge these two topics where we got Bitcoin getting brutalized and the EDX exchange. Well, the EDX exchange is going to be adding tons of liquidity. It's Fidelity, and I want to say they're a top 3 investment firm. But, kind of sticking to the Bitcoin getting brutalized here with the DXY hitting relative highs, still not quite breaking those previous levels, but kind of reversed the downtrend it's had over the past couple of days. We have inflation numbers. We have core CPI numbers looking bad. The markets are 80%. It's going to be 75 basis points in the near term. Some are even saying 100 basis points in the coming month here. So we got a whole slew of bad information coming our way. Sometimes the markets reverse when we have all this negative information. Which way is Mac and Cheesy leaning? Is it too much FUD where it's suspicious, or is all this stuff kind of on the ball here?
I've been fairly consistent with my thought regarding my current stance in the market, and I'm going to continue to be somewhat risk off for basically, I think, the next 6 months. I want to see various things play out, specifically in the real estate market. That's kind of what I'm most concerned of, and I think how that will impact the broader economy. Now, with all this news, I think a lot of the panelists touched on it. It's kind of news, it kind of isn't. It really depends on what your investment horizon is. So what is that horizon, and when do you want to get out, right? If you want to buy Bitcoin today and sell it tomorrow, okay, these things kind of matter more. But I think more of the bigger concern, or the bigger thing to actually acknowledge, is where is it shifting, right? So we're seeing these major people trying to get into the space and facilitate the use and the leverage of these crypto assets to make it easier to onboard more and more people. So that's kind of where the trends are going, right? When you look at the broader landscape of how the digital economy is growing, never once has your digital profile and the digital presence of your business been more important, and that's only going to continue. So, okay, where do we think it's going to go from just a zooming out perspective? So for me, right now, I'm just risk off, primarily due to where my exposure is. I said it on this show, but I sold out of my Miami apartment because the residential rates there and kind of the appreciation there has been absolutely ridiculous over the past year. So I've taken risk out of the market, and I kind of want to see what happens. So that's where I'll be probably for the next 4 to 6 months.
I like that. You kind of break it down a thesis of, there's a lot of major macro news events, but the macro adoption curve of digital currencies and digital assets, they kind of offset each other, and maybe one is stronger than the other. Yeah, I'm long term. I definitely agree with everything there. All right. Well, speaking of EDX exchange, don't worry, Cowboy. You're going to get your chance here. You're going to be able to lasso some subjects here. All right. We have a big group of institutional money, $1 trillion money here, launching a new cryptocurrency exchange. We're talking Charles Schwab, Fidelity Digital Assets, Sequoia Capital, Paradigm, Virtue Financial. Lot of big money coming into the space, and it's a product called EDXM. No, this isn't a new music genre. No, this isn't beats that BJ makes on the weekends in his spare time. This is an exchange that's going to use basically stock exchange crypto technology fused into one, and it's going to be able to onboard its millions of users. Fidelity, I believe, over 30 million users, a lot of money, trillions of assets under management here. So we're not talking about a mom and pop shop. We're not talking about the elementary school's pension fund. We're talking one of those major players that we're always talking about here. Now, Joe, we see big money coming in. In a bullish time, we've turned that into this giant hopium silver cloud lining playbook here where, oh my God, they have trillions in assets. Surely, and then they do that moon math that you'll see on like Shark Tank. If only 1% of their users puts in only 50% of their money, and it's going to equal Bitcoin's $200,000. Is this going to be one of those kind of nothing burgers, we kind of saw with spot ETFs? Or is this maybe a sleeping giant that cryptocurrency isn't prepared for?
I do think that there is a little something here. But I really think that their main motivator is what you guys just alluded to. They're rich, but they want to keep getting richer. If they can get their, communities into their exchange, and start competing with these really big exchanges. There is tons of money in being basically the house at a cryptocurrency exchange, right? Think if, you do sports betting or gambling. I know, DZ, you like to go to Vegas, and I think you'll be out there in a couple of weeks. So
yeah. CNFT Con. Sign up if you haven't been. I'll hope to see you there, Joe.
Yeah, I mean, there's a chance that I will be around. So my point, though, is like the sports books, they don't really care which way you bet, what game, necessarily, as long as, they keep it pretty close, right? And the spreads are pretty equal, they're going to be winners in the long run. I think the same mentality is coming out here. They're like, hey, look, why wouldn't we do something like this? Now, do I think that there actually is some good that comes out of this? Absolutely. Number one, more people will have, trust in these three compared to some random exchange that just all of a sudden pops up. That's a good thing. Another good thing is that they actually probably will put more liquidity in the market. That's not a bad thing, right? That liquidity's got to come from somewhere. So either they're buying it, right? Or they're getting it, they're getting their hands on it some way, right? So I do think that could be a good thing. Also, one other last point here that could make this a good thing is that I don't know what different cryptocurrencies they're going to have on there or what different coins there are, but I know it's better to have different options rather than just having one point of failure. I think the really cool thing about crypto is that you can choose decentralized exchanges, you can choose centralized exchanges, you can choose new exchanges, you can choose wherever you want to go. And the other thing that they did say was that they're trying to be the safer, faster, better crypto exchange. The cryptocurrency is still, to me, risky. So make sure, do your research. Don't trust these exchanges just because they said it. Really pay attention, because we've seen a lot of these quote unquote trusty exchanges, and things kind of go a different way. I don't see that happening with this, but say that
Yeah, I was going to say, I'll say this about crypto ads. Crypto ads today are like cigarette ads of the 50s. It's like, okay, is it better, faster, more secure? We don't know. Lucky Strikes, they're toasted. Is that good? I don't know. Sounds good. And the Cowboy's happy, so I guess I'll smoke one. All right, now, speaking of Cowboy, he is happy over there in that corner. What do you think? I mean, I don't want to say it was a bleak picture, Joe, but, he basically is saying Fidelity, they don't care about crypto as much as they just want to get an exchange out there. They make money if it goes up. They make money if it goes down. They want to capture that spread. Do you think it's more in the camp of, here's an opportunity, we need to just launch an exchange? Or is it maybe some young upstart executive is like, no, this is the future, and this is just the first step in their playbook?
Look, you and I are peons to these giants. And what do we care if a giant gets a new club, a shiny new club to whack us with? And that's what this EMXD, whatever exchange stands for.
More whales funneling the money into their pockets, essentially.
It's just more whales. Look, there's only 3 ways that Bitcoin is going to U-turn. Only 3. 1, Bitcoin halving. That's the only way, or one of 3. 2, the Fed U-turns, okay, stops tightening up on us, okay? And 3, and last but not least, 3 is big regulation, okay? Big, they put stipulations, they put rules, they put authorities, they put regulation in place so that big money, this whole one exchange comes in, says it's safe and all this, and they're doing different. Look, we've all been trained to think that we need centralized exchanges to keep us safe. We need centralized banks to keep us safe. We need to untrain our brain here. That's the magic of blockchain. That's what blockchain is really. It's freedom. It's the ability to retrain our brain and to make sure that we take our own security of our own future, our own monetary, everything that we can accumulate and our fruits of our labor, and secure it ourselves. And that's what we're after. We're not trusting some big giant that can Celsius us. We're not trusting big giant Luna that crash on us. We're not trusting these next exchanges. And there's going to be many more. There's a lot of exchanges out there. We don't need to trust any of them. You and I have that responsibility to keep it safe ourselves on blockchain.
All right, we need to retrain our brain. That's a tattoo I need to get at the top of every bull market.
Amen.
All right. Amen there. Hey, hit that like button if you left profits on the table. I know at least one of you didn't sell the top exactly. At least one. All right, now, Mac and Cheesy, let's talk about, exchanges and how this money are, they previously said, they're saying we're high compliance and we're, a lot of security. It's going to be very fast and efficient and all that great stuff. We have financial giants in here, Schwab, Fidelity. Are they going to be able to beat out the Krakens, the KuCoins, the Geminis, even the Coinbases? Are they going to be able to beat out these earlier crypto exchanges due to their connections? Are they going to be the first to get FDIC insured, for instance? Are they going to be the first ones to have those high-level meetings with, SEC officials, CFTC officials? Are they going to beat out Brian Armstrong, Coinbase, and co?
I think there's a chance, right? There has to be a chance when they have these relationships already in place. I will say maybe not Coinbase, because I think Coinbase has done a lot for, say what you want about Brian Armstrong, and Coinbase as a whole.
I love his
think
haircut.
They've done a lot for. He's
got
a great haircut. He may have the best hair in all of crypto, and that might be something we can all agree on. Now, say what you want about Coinbase, right? But I think they've kind of paved the way. So I think they are somewhat in the driver's seat. But let's say if Fidelity comes in, they have the user base, they have the boomers, which you don't underestimate the value of the boomers.
They have the money.
People that are and they have the money. So I think that alone, right, that'll drive adoption, and that can be a major factor. So I wouldn't rule it out once they decide to turn the stream on, because if they truly decide to kind of buy in, then they have the opportunity. Now, I will question their developers and their engineers if they're going to actually be able to build these things. That's some of the conversations that we have internally with some of the teams that we work with from an engineering perspective on building some of like the more cutting edge crypto stuff. A lot of the times we'll do analysis of who are the competitors in the space, and if a company who's a Fidelity in that specific sector, if they decided to turn it on, if they would be able to actually build the product.
Yeah, who would want to work for them over Sam Bankman-Fried? Who would want to work for them over Yuga Labs? I mean, I know what place I would go to, and it wouldn't be with the evil lizard people. I don't know how else to say it. All right, I don't think they're lizards. They're aliens. All right, now, Brad, last question here. We're bringing up boomers here, and, the big money kind of funneling in with them. But what's going to be the success rate? You think of everybody who has the ability to get a Bitcoin spot ETF, hey, my uncle, he can go buy, Grayscale share, but he's not. So once it's Fidelity, say they have the best, I don't want to say boomer centric product here, but the best product for people, and sophisticated investor, more mature investor wants to keep their assets safe here. Are they going to be able to turn? I mean, is there going to be any kind of success rate here? Or is this looking like a sub 1% adoption by their customers?
I think that it's going to be amazing for crypto in the long term. What an amazing panel this is, real quick. I just want to say,
Mac and
Cheesy and Cowboys of Crypto and Joe, man, you guys are doing amazing, content today. It's just fire. And I also, real fast, I just want to thank DZ and Cowboys of Crypto and Mac and for wearing hats, because it makes me feel much less conscious about my hair. So thank you guys.
DZ,
I do appreciate that.
Hit that like button for the rare DZ hair reveal.
This takes me back to about 2018 when I came across a guy named Tika Twari, who I know, most people, you either love him or hate him. But one of the things that I learned from him that I believe is valuable is he talked about this adoption. He talked about Fidelities and the JP Morgans and how they were bashing Bitcoin and talking about it going to zero, while all the while in the background they were setting up the on-ramps and getting ready to be able to offer this to their clients, because they were not going to let Coinbase and all these other exchanges slurp up these millions and hundreds of millions and potentially billions of dollars in fees, that it was coming. So follow the money is what he said. Crypto is inevitable, and these guys are not going to let it go by without them getting their finger in the pie. And we've seen that over the last few years. They are coming, and they're coming hard. And I do believe that when this, situation, when ETFs come into play, when Fidelity and some of these big financial institutions can get, Bitcoin into people's 401ks and that kind of stuff, it's definitely going to be mass adopted. I think a lot of people are intelligent enough to know that you want to have, a few percent of your assets in what is considered to be a risky play. And hedge fund managers, especially the people that are making the decisions of where to put these funds, are going to definitely want to get Bitcoin and some of these higher risk assets into these 401ks. So I think it's going to long term even though they don't have good intentions, Fidelity is not doing this for us. They're not doing it for their clients. They're doing it for all the money that they're going to make, but it's going to ultimately benefit us. And then one last point, folks, for those of you that are watching today, you can understand you are in a moment of time that you might never see again in your lifetime, folks. If you go back to like 1990, Microsoft, you could have made millions of dollars off of a few $1,000 investment in Microsoft from 1990 to about 2000. But if you were to Microsoft in 2000 and held the last 20 years, while you would have made a okay return on your investment, you wouldn't have created wealth. Right now in crypto is your opportunity for a small amount of money to create amazing wealth over the next 5 or 10 years. But by the time these institutions have it to the point where you can put it into your 401 and it's getting mass adopted, it's going to be too late to make these, face melting gains. So now is the time to jump in.
And on that note, you could turn $50 into 200,000. You know how? 20Xs. I'm not saying a 20X is easy. I'm saying it's not that impossible though in crypto. If you're interested in the bear market, 50 to 200,000, 220Xs, you are there. Hey, imagine if you put 50 in a few coins here. Yeah, imagine you did 500. Now it's 2 million, 5,000, 20 million. It starts to add up. Now, now 20 million would be like in one of Joe Parys's 700,000 market cap altcoins. You try to sell, it's dump. I'm kidding. No, it goes from 700 to like 47 million, and then that's when you get out. All right, now moving on here. Let's talk a little doodles here. I want to shout out Crypto Billy. Follow NFT Alpha Show with the super chat. All right, that was a great little gift there. Doodles just tweet out, we are thrilled to announce Doodles has raised $54 million at a $700 million valuation. Wall Street Journal first reported on this. Then this is from Forbes. You can see, I just want to jump to this. They're growing the team from 11 people to 30 people. Brandon Rosenblatt is first to start, and then they're going to start hiring 18 new full positions: head of finance, business affairs, marketing, social media, project managers, front-end engineers, back-end engineers, devs, designers, illustrators, and more. So Mac and Cheesy, now you got to deal with the doodles stealing all your good employees here. I am going to jump to you first here. We're talking about hiring devs in this market, and it is a devs market. It is hard to hire good help, especially with more obscure blockchain technologies, more obscure coding languages. Is Doodles going to be able to attract that top tier talent? Do you think those 18 job positions are going to have crickets, or is it just going to be thousands of applicants here?
No, we like the Doodles. We like the Doodles, and you're going to want to work for the Doodles. So going back to South by Southwest, and that was really the first time. So if you rewind back to Web 2, and if you were walking around South by Southwest, that's when Twitter kind of first came on the scene, and that was really the revolution of
Uber, Airbnb, a lot of good Web 2 companies.
A lot of Web 2 companies. So you walk around, and that was the energy, right? It felt different. Oh, this is a new internet. So I didn't get the opportunity to be there for that, but I was there for South by Southwest this past year, and people that were at both events, they explained it as this feels a lot like that South by Southwest, but for Web 3. Now, a key point here is while you're walking around the city of Austin, you couldn't help but notice what Doodles was doing for their on-site activation. They had the entire city, the entire town talking about what they were doing. They are one of the blue chip projects, and they will not have a problem hiring engineers. In fact, I was looking at their roles and I was like, which one of them do I fit in? So not actually, but but they will not have an issue hiring engineers. What I do think they may have an issue is aligning with a $700 million valuation.
Yeah,
that's a lot of money. And they've also already raised a lot of money through their initial Doodles collection. Then they had the
secondary
Doodles
drop.
Space, which was happened to be a non-dilutive, but then they had the box. They've done a number of things that were, they've done things that extracted value from the current holders, which is expanding their ecosystem. But I like the Doodles, and they're not going to have any issue with that. I am excited to watch and see how they build, because they've been doing something a little bit different than the rest of the NFT market. Whereas you look at Utes list, and it was all about attention, Twitter Spaces, things of that nature, where they've actually gone dormant on their Twitter. They haven't tweeted since like end of July. So they've clearly decided to do a slight change from the rest of the NFT market specifically. But their team, I've liked since they started, and one of the projects we actually built was inspired from their second non-dilutive collection.
Yeah, no, last year's NFT NYC, or I guess this year's, I think they probably, all people consider they had a top 3 showing there. Definitely Bored Ape with 4 days of concerts, but Doodles, their interactive event, was right up there with them. Now, let's talk about the valuation, Joe. $704 million. A lot of people, why didn't they just sweep the floor? I'll go ahead and answer your question, because they want royalties. They want percentage. They want a parcel of that dev wallet, of all the royalties rolling in that wallet. They want a piece of that. They don't want to just sweep the floor. But $704 million, you hear that, Joe? I mean, Mac's saying that's going to be tough to, live up to. I think I'm agreeing here. What are your thoughts on that valuation, and, the fact that they were able to pull in $50 million?
Well, I see both sides to the coin on this. They got the valuation and they got the money. So somebody
market spoke.
That's what I mean. If they would have asked for more, maybe they would have got more. If they would have asked for less, they probably would have got that too. So the market has spoken. Another thing that people haven't seen yet on Doodles, and it's right there on their website, Doodles 2. It says new information is coming soon. So is there more stuff like behind the scenes that we don't know? Because like this, Mac and CG said that like they haven't been posting a whole lot. Is it worth it? To me, I take a look at like what they have built. I think the artwork is pretty cool. I think they've built a very nice community for themselves. And I think that's where the valuation is coming from, right? Like you have to look at communities, and like it's such a, people don't understand this with crypto still. It is, that community aspect is very, very important. I made a video yesterday about Shiba Inu and a couple other, and the Doge chain. And I had more people show up to that video than a lot of other videos that I have made. And it's simply because they're invested. There's been more eyeballs on Shiba Inu's website than Bitcoin's website. And so as an investor, like those are some of the things that I would be looking at. Are they getting traffic? Do they have a real following? Are there other celebrities like Justin Bieber, I think owns a doodle? Are there other people that own these doodles? Like that's what I'm looking at. And if that's the case, and I believe in the team and I think that they can execute, $54 million, while it might sound like a lot to a lot of VCs, they'll throw a couple million around and it's no big deal. So
all right.
Well, the valuation.
Cowboy, I mean, I see you shaking your head. You seem incredulous here. I mean, were they better off with a can of beans and some tumbleweed? They raised $50 million. Was that dumb money, or is this the deal of the century?
We've also seen small, tiny coins go shoot up to the moon. We've seen this time and again. Look, I would never be one to down a project, especially something like a blue chip project like Doodles. But if someone explained to me how a cartoon drawing of a skeleton barfing a rainbow is worth $700 million, it doesn't connect in my lizard brain. I'm simple. And here's the fact of the matter is that when in the last 14 years, we have been printing money. And when we print money to the economy, everything inflates. And when everything inflates, there is a false sense of success. Like me as a business owner, I'm so successful and I got all this money. And we have all this false confidence. And so I think what's happening right now, and especially in this year, when the Fed's tightening, is that it's retraining a lot of this false confidence, this false narrative that, this money was easy. And it's really not. It's very difficult to raise. It should be difficult to raise 700 million. I mean, I know Joe's saying that it's not that much, but in reality, like if we're looking at the community aspect of it, it is powerful, especially Shiba Inu. These communities are powerful, and there's a network effect that brings value in. But at the end of the day, is the value there? Is the actual value there? And that's quantifiable by a lot of different ways. To me, I wish Doodles all the best and the community all the best, but it's very hard for me to see where the valuation comes from.
Okay, now Brad, that is a lot of money, but let's not talk about Doodles, the corporation, so much. Let's look at the NFTs here. I pulled up the OpenSea. This thing jumped 2.5 ETH in the matter of seconds after this tweet was released. People are going to be hearing this. They're feeling FOMO. They want to get in. They see that it's under 10 ETH. They're maybe telling themselves it could be 20. It might go up. It could be even more. Do you have any general advice for chasing pumps, feeling FOMO, fighting emotion? Just general advice, not so much on, Doodles the IP or Doodles the brand, but when you feel that FOMO, what should your internal monologue be?
Yeah, I think that all of us here would agree that getting wealthy in crypto is super, super easy, but most people don't, and it's because they can't control their emotions. And so if you're going to invest in these high NFT plays, I think it's super important to have a plan, to be ready to pay a certain amount. And if it goes above that before you've had a chance to buy in, then you have to plan, and I wouldn't buy. I would wait for it to come back down. I would
Okay.
also have an exit strategy anytime I'm investing in something like this. I don't necessarily want to hold something like this forever. These NFT plays are going to have their ebbs and flows. We saw it with Bored Apes. We saw massive rises up to somewhere in the ballpark, don't quote me on this, but around $250,000 or so, I want to say, for a Bored Ape, and it came all the way back down now to around 100,000, I think it is. And so what I like to do in these types, if I can afford to, is buy two.
Mm-hmm.
And then once I've doubled my money, sell one and kind of free roll on the other one. But yeah, man, keeping your emotions under control and thinking about your long-term plan, whether it's NFTs or whether it's Chainlink and Cardano, you don't want to just buy them with no idea of what your exit strategy is. You kind of want to figure that out ahead of time and then do your best to stick with it.
Yeah, great advice there. Have an exit strategy. Let me give you the NFT alpha breakdown on this. I'm not jumping in on the Doodles at this price. Mac and Cheesy brought up the fact that they did announce Doodles 2. Full disclosure, I bought in at Bored Ape at 3 ETH and some change. Why? I wanted a Bored Ape. Brad, it actually went up to 420,000 right before the other sides met. So they were very, very expensive at one point. My Mutant Ape was worth 120. I didn't sell, so maybe don't listen to any of the advice that I'm giving. But my plan is, once Doodles 2 drops, I'm assuming every Doodle holder will get one for free. Doodle holders are going to be mad that they didn't take profits. Some are going to sell the Doodle 2. Doodle 2 might get low, maybe below 3 ETH, maybe below 2 ETH. That's when I would buy. I would buy a Doodle 2, try to get in, max fear, all the people taking profits. And then I would be a long-term hold for me, just like my Mutant Ape is. So that's the NFT alpha breakdown. I normally don't share any advice or thoughts, but I think I have a strong conviction play with the Doodles 2 there. But that is all we got time for. And it looks like Joe was the winner. Make sure you hit that like button. Joe, feel free. Leave us with some parting thoughts, man. You know what? I think it was all that the Bitcoin getting brutalized, man. You pulled ahead there. You never look back.
Well, thanks, DZ. Really appreciate it. Make sure to smash up the like button, click that subscribe button, and also make sure to follow all the guests. They were fantastic. It was an awesome show. We had a little bit of back and forth there, and just really grateful to be here. So looking forward to being back on Around the Blockchain, and keep coming back to the show because this market moves very quickly, and you're not going to want to miss out.
All right, Cowboy, you did a great job. I need to read this real quick. This is a simulation. Bears are wearing cowboy hats. We'll definitely have to have you back on. Make sure you're following everyone's channel here. Mac and Cheesy, Joe, Cowboys of Crypto, of course, Brad Varnell. And until next time, BitSquad, easy out. And you might get a guest host for tomorrow. Roll out for that.
Frankie Candles.
Hey, Frankie Candles is live in like 6 minutes. You might want to check it out.
Ooh, calf cam.